Thanks for clicking. All eyes were on Stats Canada this morning as it was set to release Canada's inflation rate for the month of February, with most economists predicting that headline inflation would drop down to 5.4%. We got our answer this morning when headline inflation came in at 5.2%, much to the relief, I'm sure, of Bank of Canada Governor Tiff Macklem. And the news comes as many are continuing to ask, when can we expect the Bank of Canada to cut interest rates?
Probably tomorrow morning.
A growing concern not only for those in the real estate industry, but also for financial stability, as cracks stemming from the rate hikes that we've seen over the past year start to show up in the system. So what I want to do today is go over Canada's inflation rate for the month of February, take a look at some pressures on our inflation rate, which will likely inhibit the bank's ability to cut rates, and then discuss what to look for next. Speaking of next, the Federal Reserve is set to make its interest rate decision tomorrow, which will no doubt have a big impact on Canada and the options available to the Bank of Canada going forward. We'll obviously have an update out on any decisions made by the Bank of Canada on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into Canada's inflation rate. As mentioned, Canada's inflation rate came in at 5.2% in February, a major drop from the 5.9% that we saw in January, and a major drop from the peak inflation rate of 8.1% that Canada saw last June. Measures of core inflation, the measurements upon which the Bank of Canada bases its interest rate decisions, also fell in February, with CPI median down from 5 to 4.9% and CPI trim down from 5.1 to 4.8. Stats Canada was quick to note, and I'm sure we are all well aware, grocery prices remain elevated, rising 10.6% from this point in time last year, and marking the 7th consecutive month of double-digit increases. So, all relatively good news coming out of Stats Canada this morning, with the exception of the thing that everybody buys, food.
Is that the issue?
Headline inflation was down to 5.2%, with the pace of price increases slowing much faster than analyst expectations. And core inflation, the measurement that the bank looks to when it's deciding to raise interest rates or not, also slowed. And this will no doubt be welcome news for the Bank of Canada, as it will allow it to continue with its pause on interest rate hikes. With that said, it's not clear that the pace of disinflation, the slowdown in our price increases, will continue at as rapid of a pace that we've been seeing over the past few months. It's not clear that there's a straight shot to that 2% target inflation rate, as there are a number of inflationary pressures which will continue to push our prices upward. Indeed, if we look closer at the data, we can see that food and shelter constitute almost 50% of the CPI basket, and those price increases are not subsiding very quickly. And although we already mentioned that grocery costs are up 10.6%, shelter costs are also showing some concerning signs, with mortgage interest costs up 23.9% since this point in time last year, and representing the item in the CPI basket that showed the biggest increase in February. And it's not likely that mortgage interest costs are going to get better anytime soon, with 1.1 million Canadians set to renew their mortgages this year at a higher interest rate than they had previously. Mortgage costs for those with variable rate mortgages obviously much higher than they were at this point in time last year, and 5-year fixed mortgage rates also up as well. And that's not even to mention that rent prices continue to surge upwards also. So we have food and shelter, which constitute over 40% of the CPI basket, both of which don't have a very positive outlook for the coming months ahead. And then, although headline inflation has certainly come down by a lot since we had our peak inflation rate of 8.1% in June of last year, core inflation, while slowing, hasn't slowed by nearly as much. When headline inflation was sitting at that 8.1%, core inflation was sitting at 5.3%. Fast forward 7 or 8 months later, and core inflation is only sitting at 4.8%. That's a 0.5% drop in 7 or 8 months, and a far cry from where core inflation is supposed to be. The last time Canada was at its 2% target rate was in March of 2021, and during that time, core inflation was sitting at 0.9%. And if we look at pre-pandemic, core inflation hovered right around that 2% mark. If core inflation is expected to get back to that 2% mark, even 3%, in order for the Bank of Canada to be able to cut rates, then going at this pace, it's not going to get there this year. It's not going to get there for quite some time. So we have food costs showing minimal signs of slowing. We have mortgage interest costs set to go up over the next year as those rate hikes show up in the data. We have core inflation not coming down nearly as fast as headline inflation. And that's not even to mention the wage increases that were reported last week by Stats Canada, which are now catching up to the rate of inflation. Wage increases which the Bank of Canada has repeatedly warned employers against as it tries to prevent a wage price spiral.
I tell you!
And all of this isn't to say that we're not moving in the right direction. Price inflation is slowing, and these are some encouraging signs. But I don't think we're going to get there as quickly as many had hoped. There are underlying upward pressures being put on our inflation rate, including food, including shelter, including mortgage costs. Our core inflation rate isn't coming down as quick as many had hoped. And all of these, I think, will prevent the inflation rate from coming down to that 2 or 3% level that the Bank of Canada would have to see in order to justify a rate cut. With that said, we'll obviously continue to track the Bank of Canada's reaction to Canada's inflation rate, to what's happening in the Canadian economy, and to what's happening in the global economy as well. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.